Hello and welcome to the Frontier Views webinar on Russia's healthcare outlook. I'm Claudia Mellin, Client Services Manager for EMEA. Before we get started, we realize that some of you may be new to Frontier View, so we'd like to take a minute to provide you with a very quick overview of our firm and how we work with executives at major multinationals. Frontier View provides the world's best market intelligence and advisory services for global business professionals. We help our clients grow and win in their most important markets by informing and powering the market monitoring, planning, execution, and other critical decision processes of our clients. With continuous research and insights, costing solutions, and transaction support services, we provide our clients, a small sample of which you can see here, with timely, actionable insights to adapt and win in changing markets. If you're not a client and are interested in receiving 60-day complimentary access to our Frontier View program, please leave a comment in the chat box or email us at info@dapperfrontier.com. As part of our offering, we are excited to announce that we have recently launched a new mobile app. Frontier View Mobile, which is available on both iOS and Android, includes all the relevant content you need to monitor markets, including this webinar recording and presentation deck. We encourage you to download the app to have access to these insights and more at your fingertips. Current clients can access the mobile app using the same login information as our browser application. If you're not a client, you can still download the app and start monitoring up to 5 complementary countries and access other features like daily news and notifications. Having briefly introduced our company, I'd like to take a moment to introduce our presenter today. We have 2 members of our research team on the line for today's call. The first is Mark McNamee. He leads our Europe research practice, and he is the lead analyst for Russia, and he will be walking the group through Russia's macroeconomic situation through 2021. The second is Antonio Martinez. He leads the global healthcare practice at Frontier View and will be sharing insights on the outlook for the healthcare sector in Russia over the next year. Because Mark and Antonio are in constant contact with our clients, they will be discussing not only the results of our research, but also what we have been hearing from multinationals who are being impacted by the coronavirus. If there are any insights you see today as part of this discussion or any questions we don't get to answer, our client services team will be happy to follow up with you directly. And with that, I'd like to turn things over now to Mark to take us through our agenda.
Great, thank you, Claudia. So welcome all. Many of you, I'm sure on here, I've spoken to over the last several weeks and months, and hopefully attended our other Russia View webinars we've been holding each month since the beginning of the year. So welcome to you all. As far as the material we'll cover today, we'll sort of split this up between Antonio and myself. I'll be covering, as usual, sort of the macro outlook, all things global, regional, and more specifically Russia related, and then lead into Antonio's coverage then of Russia's healthcare landscape. So we'll start with the 2021 outlook and then move to healthcare and then the Q&A at the end. On the next slide, we can continue here. Moving to the epidemiological assumptions. Claudia, you can bring up all of the, Antonio, bring up all the animations here. So first things first is that COVID will not disappear on its own, despite what President Trump or numerous officials around the world have said over the last several months. It is going to stay with us. It's essentially a matter of time until the vaccine actually comes into, is mass produced and distributed around the world, which means this is something we will be dealing with at the global level and at the Russian country level for minimum the next 6, 9 months, 12 months from now, which means that the social distancing measures, the mask wearing will continue as we continue to sort of fight these second, third wave, fourth waves, as they keep sort of bouncing back and being restrained and bouncing back and being restrained. The number of caseloads popping up and receding over time. All of that said, the issue here, of course, is then relates to when we can reach herd immunity via a vaccine, which is in our anticipation will be found and then sort of produced and mass distributed by the middle of next year into many of the developed markets, and then gradually over the rest of the world in the second half of next year. So in general terms, that's how we see things, which means there's a lot to sort of manage in the next 9 months here. We can go on to the next slide here. So what I've been talking about here in terms of these upticks in cases and then receding cases is what you can see here as we've described this for some of you who've been on the previous webinars as sort of the hammer and the dance. So the hammer was in Q2 when the whole world went under these massive lockdowns, trying to buy time, understand the nature of the virus, what population demographics are most vulnerable, protecting national healthcare systems, etc. And then over time, until we reach that vaccine, of course, we're going to see these upticks and receding cases. At the moment, of course, Russia, Ukraine, a number of markets in CIS, Western European countries, are all facing one of these upticks again. So they're now being sort of tested quite, this is the strongest test they've faced, frankly, since the initial outbreaks in Q2. They were then controlled. So we're getting a good idea of how these governments and these societies, bottom up culturally, socially, how these societies are responding to these subsequent ways, one of which we are currently dealing with here. So moving to the next slide. The impact on the economy, right, overall, is actually quite varied from region to region and market to market. We've organized this one from left to right in terms of the bounce back for next year. So as you can see, India, for the wrong reasons, of course, statistically will be bouncing back quite strongly, but that's after an extreme recession in 2020. That said, China and ASEAN dealt with the issue first, dealt with the issue better, dealt with subsequent second waves better as well, and therefore they're more resilient and will be bouncing back more strongly into next year. So think about the portfolio plays from headquarters in terms of where investment could be diverted in light of this more resilience and greater resilience in 2020 as well as rebound in 2021. And then I'd point out, if you look at the far right of the chart, again, generally speaking, Central and Eastern Europe, broadly speaking, so including all Central European as well as Russian and CIS markets, a little bit more resilient than most of the markets, really, nearly all the markets, frankly, around the world this year. And then next year, statistically, the bounce back isn't sort of quite as strong, since the depth of the contraction in 2020 wasn't as deep. But nonetheless, more resilience this year with a decent bounce back next year. So a little bit more sort of predictability, a little bit more consistency, relatively speaking, compared to most regions globally, which is generally positive news. And Russia fits this as a good example of these growth trends in Central and Eastern Europe. Next slide, please. And then related to energy prices, of course, the impact on commodity prices in general, specifically oil and gas. In the case of Russia, things are actually looking, in hindsight, from where we are today, energy prices have actually been far more resilient and higher than not only than we had actually honestly had anticipated, but also even most other research houses and banks had expected for energy prices to perform this year. So we're looking at an average this year of around $41 a barrel Brent. Energy prices are a bit higher than that currently. We expect them to continue to improve in the coming months. But of course, this depends upon the global recovery. As the global recovery, though, has been relatively, of course, we're seeing some issues in the last month, but the global recovery since May and June has been relatively solid, obviously, comparatively speaking here. This has helped boost energy prices. Meanwhile, the OPEC arrangement has continued, so the OPEC deal cuts. This will be a question mark going forward. We are relatively optimistic that this will hold. This will help keep a lot of supply off the market. But nonetheless, this is something that every couple of months will have to be continued to be agreed upon, and then the group needs to ensure compliance of all the members. So this will be a tricky question consistently, but we do anticipate every couple of months a continuation of the OPEC deal, and therefore keeping energy prices elevated. Absolutely critical, of course, for the Russian budget, which nearly 40% of the Russian budget revenues are based upon energy exports. So absolutely critical. This is determining government budget, which we will talk about in a future slide. So the higher these can go and more consistency, the greater benefit for government healthcare spending in the market in 2021 and beyond. And moving on then to of course, never-ending issue of U.S. elections. So we do expect a Biden victory. We've actually even increased our likelihood for Biden to win in the vote in the first week of November here. A couple of things, points to make out is that polling has moved even more decisively towards Joe Biden in the last 2 weeks, ever since the debates at the beginning of October, as well as President Trump and much of his administration getting COVID, of course, which of course kind of undermined the administration's ability to tackle the virus once the administrators themselves are actually getting sick with the virus. So polling has actually gone even further towards Joe Biden, particularly swing states still remain quite solidly in Joe Biden's favor. And quite critically, there's always this analogy to, well, what happened in 2016, why wouldn't that happen again in 2020? The first answer is that it very well could, of course. However, it's far less likely to happen in 2020. What happened in 2016 is unlikely to happen this time around because, as you can see from the polling numbers, first and foremost, that Joe Biden, before the conventions, the Democratic and Republican conventions, and then after the conventions, Joe Biden has had far more popularity and support than Hillary Clinton ever did. Secondly, unlike in 2016, the amount of undecideds are far smaller. There's also evidence showing in the last 2 to 3 weeks that the undecideds has shrinked even further and have moved more towards Joe Biden in light of President Trump getting COVID and the perceived relatively weak performance of Trump in the debate with Joe Biden. The point here is that, unfortunately, with a Biden presidency, this will likely, very, very likely, bring into effect very harsh sanctions in the first half of next year, which we believe are currently being priced into the ruble. So we'll talk about the ruble on a future slide. But nonetheless, this will then naturally impact translation costs when you're, say, sending money, repatriating money out of rubles out of the country back into, say, dollars or euros. And moving on to the next slide, please. We had polling as well. I will initiate this polling question here in terms of how confident you are that you'll hit budgeted sales targets for this coming year in 2021. So too hard to tell, too many conflicting signals, not confident at all, not very confident, somewhat confident, very confident. So we encourage you to please answer this. And then once we have a sort of a critical mass of responses, we will then show the results. Okay, still waiting here. All right, so interesting. So we see here somewhat confident. Okay, and this actually goes in line with our general polling. So we did polling across B2B, B2C, healthcare clients, consultants, firms, and this actually aligns quite well. Even a little bit more optimism, honestly, than our earlier poll. So we're looking at about, actually nearly about, the latest polls, I have 62%, somewhat confident, 5% very confident, 29% not very confident. But in any case, the majority of companies quite confident hitting 2021 sales targets. I think this is encouraging because we did similar polling a year ago in 2019 for 2020, And we had similar results of nearly 70% of companies feeling quite confident they can hit the 2021 sales target. So it's good insofar as there's optimism for the market, but then also headquarters is relatively realistic, most likely, for what the market can bring in 2021. So let's move on to the next slide. This, as I mentioned, this coincides with what we had already shown in terms of the healthcare specific responses. So we can go to the COVID slide here. That's fine. So looking at COVID and where things are today, cases and hospitalizations, unfortunately, have been rising throughout the month of September in particular, and into this month as well. The issue here is as usual, not exactly the number of just new cases, of course, but the hospitalizations, and this is what is becoming concerning. This is why Mayor Sobyanin of Moscow and President Putin have encouraged more restrictions. So we will likely see probably more restrictions than what they have spoken about in the last couple of weeks. More pressure for mask wearing and social distancing in the coming month. But the hope and our belief is that we would not see a return to the lockdowns of Q2 that we saw earlier this year, but we would see some temporary restrictions and maybe even harsher restrictions and closing down of say eating indoors and things like that in the coming months, pulling back some of the economy. And as you can see, this is also stimulated not just at the national level. So you can hit the animation here, Antonio. At the national level, so Russia across the board, this massive rise in cases, but also in Moscow itself. The new cases that have actually, these are higher levels than they were even at their height in Q2 in Moscow alone. And Moscow representing now about 30 to 40% of all cases across the country. Next slide, please. So the impact then on the economy from all of this sort of going on. We don't have figures yet, unfortunately, for September, but a couple of it's in line with our expectations, but there has been a bit of a slowdown in retail sales. We've seen unemployment, as you can see in the chart on the left, actually staying relatively high, sticky high. We anticipate that this will remain the case for a few months in light of all the uncertainty, in light of the lack of business investment, and the government spending question is a major one. Very importantly, the government did put a delay on the freeze on the moratorium on bankruptcies. They extended them from the first week of October to the first week of January. So that buys firms more time, and that's positive. But pay attention to that, of course, because if we see that occur, that will clearly impact consumer spending trajectory next year if we see another wave of layoffs in Q1 of next year. So in either case, unemployment has become a bit of an issue with this continued rise, and the hope was that it would be declining at this time of year. I would also note two other points. One is the premium segment. So the wealthiest consumers will be under a little bit of tax pressure into next year. So think about your portfolio plays in Moscow and St. Petersburg. The move to a progressive income tax, with the highest income tax bracket now facing a higher tax. The tax on ruble deposits over 1 million rubles, even the excise tax on cigarettes going up. So things like this will, of course, it's nothing, earth-shattering. It's nothing terribly dramatic, but it does weigh on confidence, just as confidence is trying to recover. And pay attention to food inflation. Food inflation is eating into, it is outstripping overall consumer prices and eating into discretionary incomes, of course. So this can restrain some willingness to maybe trade up for, higher quality or more expensive pharmaceutical products on the consumer side, as an example. Looking broadly across H1 by category, in terms of retail sales, a couple of noteworthy points. One is that pharma, as you can see in the middle in red here, did see a bit of decline in H1 in year-on-year terms. This is not terribly surprising. It's actually consistent with numerous other major markets around the world. This tends to correlate well with basically foot traffic into hospitals and things of this nature, and then getting those referrals and buying pharma products as a result. This was likely held back by the long duration of Russia's lockdown from the beginning of April through most of June, which of course would hold down some of that just general foot traffic, whether that's at hospitals or at general retail as well. What is encouraging, though, I would mention, is that on the left here, you can see considerable uptick in H1 of a lot of durable goods, which we find to be quite encouraging, meaning that consumers actually do have some money and they are willing to spend. And even amid this uncertainty, even amid some of the rise in unemployment, they do have enough wealth to rely on to actually increase purchases of some of these durable goods, like washing machines and refrigerators and computers, et cetera, et cetera. So that's quite encouraging for a rebound in consumer spending, broadly speaking, into 2021. Moving to the next slide. In terms of business activity, and you can bring up all the animations here, business activity, as expected, did slow a bit. So it bounced back after the end of the lockdowns. June, July was showing some positive growth and positive developments, still contraction, and then August still remained quite weak. The anticipation is that by the end of the year, this should pick up. And I won't go over all the industries here, but the important point here is that, unfortunately, with obviously industrial production relatively weak, the whole investment environment quite uncertain, and you can see investment levels, obviously, in a lot of these industries quite weak overall, in a lot of major industries in decline in the first half of the year. This, of course, is going to hold back incomes to an extent. Therefore, we are going to see year-on-year real income growth in 2021, which is very positive for the market naturally. But this is unfortunately going to hold back some of the demand as a result of the uncertainty and weak investment levels in 2020. We can move on. And then moving to the budget. So I'll finalize a couple things here, and then we can move into Antonio's section. So just in very brief terms, naturally, and Antonio, you can show their other animations here. Naturally, budget spending is going to be cut next year. So there is fiscal consolidation coming, unfortunately. The government, as you can see here, had a significant increase in spending this year in light of COVID, naturally, and therefore took on more debt. These debts have to be paid. The government is returning to its sort of historical, relatively conservative government spending sort of philosophy, you could say. And so into next year, likewise, trying to trim that deficit, not taking on more debt, and therefore cutting spending. So the deficit, you can see here, is going to come down in the next couple of years, but this also means spending is going to have to be cut, unfortunately. So this, of course, will be impacting the amount of money given to regional governments. This will be impacting the amount of money being spent on healthcare, which Antonio will talk about more in the future. My anticipation, though, however, is that similar to what occurred in 2017 and 2018, when the government budget initially was quite conservative, is that as the economy recovered in 2017 and 18, as energy prices were well above government projections, the government then, at sort of an ad hoc pace, just every couple of months, was willing to actually increase government spending, but only when the government felt quite comfortable that its fiscal position was solid. So I anticipate that will occur next year, and the government is being excessively conservative in its plans, but will amend some of that going across the year. And so going on to the next slide. So very briefly in the forecast, and many of you have already seen this, we are anticipating ruble depreciation. So you can show the forecast here, Antonio, for the ruble. Basically a lot of concern over geopolitics over the last 2 months. This has weighed on the ruble considerably, even as the dollar has weakened against most global currencies, and even as oil prices have remained above $40 a barrel, we've still seen this ruble weakness. Our expectation is that a lot of this weakness in the ruble is already pricing in a Biden presidency and therefore harsh sanctions for next year. So we anticipate that over the coming months, assuming the Belarus situation doesn't sort of worsen considerably, assuming that the conflict in Nagorno-Karabakh doesn't worsen considerably, that this then should allow the ruble over time, over the next 6 months, 9 months, to improve from its current level. But it'll be quite unpredictable because of all these geopolitical issues in the market. So you can see our forecast here against the dollar and the ruble. We can move on. Right, so we can go past this slide. Let's move to the healthcare part of things. So happy to take any questions. Not sure if any questions in fact came in, but otherwise we can hand it over to you, Antonio.
Thank you, Mark. And to give you kind of an idea, obviously the healthcare environment, the macroeconomic environment is key to understanding a bit of what the government as well as kind of the healthcare spending recovery will look like, expected to look like. Obviously, with a lot of our clients, the key dynamics that we keep discussing with them tends to be questions around demand planning, engagement models, supply chain and strategic planning, all of those within the standpoint of whether in some markets at the peak of their first infection, which for most countries were somewhere around Q2, maybe a little bit at Q3. The medium term, which is that defined as though the normalization period. And finally, the long term, which is after the dust has settled, and what are the long-term implications for healthcare policy, healthcare spending, and basically the opportunities companies will have in Russia, as well as obviously in other developed and emerging markets for healthcare. Now, in terms of what we're going to be discussing in terms of the outlook for Russia, I think the basic dynamic we will be using throughout this presentation, to give you an idea in terms of the framework, is the impact framework. We always start first with every government at the bottom here with the past trends and priorities. Every government that has been confronting COVID-19 came with it with a set of expectations, biases, and focus areas around the healthcare policy, around healthcare spending. And Russia is no different on that front. And that obviously will, to the extent that basically the expectations and the policy agendas were proven or disproven or basically shifted or changed because of that, it is based on that fundamental vision that predated the COVID-19 crisis. Obviously, I think as we were discussing, what to many of our clients is the number one issue, which is what does the recovery in normal patient activity, normal medical care, treatment pathways, as well as elective surgeries, what does that look like in each of these countries, in particular in this case, Russia? We start with the perspective around infection rates, of which we've seen a certain increase that Mark has mentioned. And we'll talk a little bit about how that may or may not impact whatever recovery or expectations of demand recovery to what for many executives is about what Q4 2019 looked like. Obviously, the question around healthcare system preparedness, the discussion around the relative mobilization abilities of different healthcare systems. That is one that obviously the Russian government has been very focused on over the last 6 months. Obviously, as well, we will discuss, because we already are starting to get a good sense of what the 2021 spending environment will look like from a funding injection and fiscal space standpoint. We will also discuss that. And obviously, questions around political management and priorities will be throughout the discussion a key factor to look at. As well, I think for this market, as well as others, the reliance on fee-for-service and patient fear to the extent that, say, in Russia versus other countries, the population is more fearful or less fearful, and the dependence on fee-for-service for basically driving how demand actually occurs in this market is also very important if you're a healthcare company. Now, let's just talk about the environment around healthcare. So obviously we know that the government's role and support is improving mildly in recent months. So what has shifted, obviously changed from the more problematic perspective that had been seen basically in terms of the government's reaction earlier in the year. The confidence in the country's direction has also recovered somewhat. And again, this is in the last couple of months. As well as when we discuss around healthcare. Again, this is a poll that is done every year in Russia, survey. And what you can see here is that even in this environment around the inaccessibility of healthcare, so to some extent, it has basically remained very similar to previous years, which is not what you'd expect given even in an environment of COVID-19 pandemic situation. So obviously Russia is a market that's kind of acting a little bit different from what you'd expect. And obviously the question around the mobility return to normalcy, we can see as well that Russia very gradually you're seeing that return back to normal in terms of individual activity. Why are we discussing all this? Because when we compare it to other markets that we cover, Russia is behaving a bit differently or even strangely because we are right now in an environment which, again, things may change over the coming weeks, but we're seeing what very clearly looks like a significant increase in the infection rate for COVID-19 as we enter the fall and winter. Now, in terms of the overall environment, let's just say, obviously, this creates a dynamic of challenge within the healthcare space. And the key dynamic that we have seen in other countries is that if you're talking about patient fear, you're talking about the impact, the bottom line is your expectations in most other countries, the expectation around elective surgeries, around patient footfall in hospitals and medical environments tend to be delayed when you see this. But obviously that is a bit runs counter to a lot of the mobility activity, a lot of the fast moving economic and behavioral indicators that we see in Russia. Now, obviously that creates a situation of a certain amount of uncertainty. Obviously, when we are talking about an environment such as Russia, where the environment remains very much one of economic recession because of the lockdowns earlier in the year, because of the impact of COVID-19, but a recovery that we expect to continue to gather pace over the next 12 to 15 months. And one where basically the government, particularly the federal government, has taken on a much bigger role in the previous months. Now, what is the government's reaction overall in terms of policy agenda? Obviously, in terms of the one of the things that has been discussed, obviously, globally is around the question about the approval of a COVID-19 vaccine, relatively early in what generally would be described as the process for COVID-19. All I will say on this front is obviously that when we look at the approval policies, even previous to this announcement of the COVID-19 vaccine, Sputnik 5 in Russia, that basically you'd seen very much an acceleration in market authorization approvals in the first half of this year, in light of the crisis, in light of the environment. Now, that is one aspect of it, and a good chunk of that was around drugs and medical devices and diagnostic materials related to the COVID-19 crisis. But obviously, this was a big change from the activities we're seeing last year. And it is also important to note that the shift towards a more independent Rostravnador was something that was basically reversed earlier in this year as this crisis went on. Now, in terms of healthcare spending, one of the key dynamics here is that this crisis had a significant negative impact on regional budgets, and that had the impact that the government responded relatively aggressively, fiscally at the federal level, in terms of its spending policies, going into what was budgeted originally, which again, even before, this is pre-COVID numbers, already had a significant increase, mostly focusing on the national projects for healthcare in Russia. And when we look at those policies, again, healthcare was an important priority, and oncology in particular was an important focus area. And a lot of that was to be basically with big focus around extending life expectancy by 5 years by 2024. A lot of questions around the spending and priorities, but for the most part also as well to expand salaries, income levels of medical practitioners in Russia. Again, there were priorities were the priorities, and the government will still say most of these remain priorities for the government. But I think one of the key dynamics because of COVID-19 and the relative fiscal conservatism of the government, at least right now, in terms of their expectations going forward, this puts, when we're looking at these decrees, when we're looking at even the spending priorities pre-COVID-19, they're obviously moving and shifting in important ways. Now, when we look at 2020 spending, and again, this is January through August, the key point here is that the spending levels that were slated for this year, by August, the government had already spent more than they spent in all of 2019. So you saw a significant step change in spending. The federal government has moved towards boosting certain level of support for healthcare institutions, obviously public healthcare institutions in particular. That is something that a lot of that went into salaries and supporting medical practitioners, which obviously in this environment was a key necessity. But as also you see that as well in terms of some of the increases in spending, a slight increase in spending in terms of rubles per month for certain protected and beneficiaries within Russia. Now, in terms of the Social Security funds, the equivalent Social Security funds, the dynamic here is that if you're looking at one indicator of certain fall in elective surgeries, is that up until relatively recently, you've basically, and it started to happen as we started to see a certain amount of normalcy in the recovery, the actual income levels of healthcare went relatively well. And I would say that is well, increased in terms of revenue base. Now, the government itself and Putin as well has also mentioned as well, one of the key dynamics as you're looking at 2021 is around protecting and supporting that Social Security spending, because there is a certain expectation of an increase in that spending as elective surgeries come back to normal, as patient treatment levels return back to a state of normalcy, which as we talk about in terms of the key priorities of the Ministry of Health, always the discussion is first to prepare the healthcare system for further COVID-19 outbreaks, which is obviously something of what we might be describing as coming in the next couple of weeks, next couple of months, as well as number two was restore the normal functioning of medical organizations. That is a priority around ensuring that they are just both in terms of capable in dealing with COVID-19, but also the compounding impact of normal medical care, which has been severely disrupted this year. Now, there is also, in terms of the other policy measures around stockpiling, raising reserve strength of the healthcare system, modernizing of the infectious disease service, which is basically, if you're looking at what is in every single Ministry of Health budget across the world, that is certainly one that is at the top of the agenda. There is also around what was the #1 priority at the beginning of this year, the implementing May Decree national healthcare national projects. That is a priority that the government had. That was the #1 priority. Well, a lot of that priority this year has been more around finalizing a lot of that healthcare spending. Let's just say the smaller projects by the end of the year, because as one of the key notice areas is that many of these May national projects are supposed to complete by 2024 have been, let's just say, their timeline is extended to 2030 because of the COVID-19 crisis, the economic impact, and the overall impact in society. There are other measures as well around the approval of regional primary healthcare modernization programs, which again, one of the key priorities as well is around improving the primary care system, as well in terms of improving quality control through leveraging primary data. Again, one of the key threats, and one that maybe is not seen here in terms of the discussion that one might have globally, is around digital health. And the government is, and one of the key dynamics and needs in Russia is around data. This is one of the dynamics that is also a priority for the Ministry of Health through the end of this year, but obviously is going to eat in going into next year. Now, public healthcare spending, it is important. Again, this is looking at the same budget that we were at, the overall budget that we were seeing in Mark's slides. The key dynamic here is that public healthcare spending will not be entirely sheltered from spending cuts in 2021. So if you're looking at your spending expectations going into next year, the important point is this. The government this year, which again, relative to a budget closer to 850 billion, is increased to 1.15. The general sense you would have over the next few years is that the government spending budgets are going to remain flat, at least in terms of the federal spending budgets. The government also expects that they will be supplying support for Social Security, which is just much of the resourcing and financing for the healthcare system. That is where it comes from. But to a certain extent is also considering that regional governments will receive only a certain level of support, or let's just say not quite at the level of emergency support that they had this year. So the extent that you will find some of these spending pressures coming into the system, because again, we are talking about a situation where if we assume that healthcare spending levels or normal medical care levels will return to normal in 2021, the expectation should be that if any spending pressures will come, it will come in the regions. And that's important to take into account as you're looking at the 2021 expectations. Now, obviously, in terms of the post-COVID-19 crisis agenda for the Russian government, there are many. Expanded powers and responsibility for the federal government healthcare. This is very, very important to understand. This is something that we were seeing even before COVID-19, which was a certain amount of desire or focus or push within the federal government to enhance its role in healthcare spending and healthcare management oversight. That is something that we expect is already in terms of some legislation to make that easier, legally speaking, to make that constitutionally more clear. But that is something that companies should be expecting to be a dynamic going forward. It's something that we see in other countries. It's something that we are certainly seeing a lot of messaging coming out of the Russian government, although, again, not necessarily with a massive infusion of new resources on that front beyond the step change increase that we are seeing. We've already seen this year, and that will continue in coming years in terms of spending. There is also a focus around uniform requirements for remuneration of public sector healthcare workers. Again, not just for the public sector healthcare workers is this law, but the key dynamic that executives should have, and the expectation is basically the government sees challenges in terms of the healthcare spending support that executives are confronting in Russia. And that is a dynamic that companies will need to will be confronting going forward. There is also as well, and again, I've already mentioned before, the developing an effective surveillance system for infectious diseases across the country, very much a priority as well. Not a surprise, it is almost a universal that we have seen elsewhere. There is continued progress in terms of pharmacy deliveries for OTC and RX drugs, what you might call the digital health agenda, or the start of a digital health agenda, this as well as the passage of a telemedicine law, to really legalize and create guidelines around full-scale online consultations, as well as, which is as important, ensuring that there is financing and reimbursement for these consultations in the compulsory medical insurance scheme, including for incorporating medical devices involved in remote care. You've also have, and again, this is starting to shift a little bit in terms of increasing the incorporation of private hospital providers into the OMI scheme through increased medical fees. There's a little bit more controversy and discussion around whether that is the approach the government will want to take going forward, but let's just say that remains up in the air. We probably get more visibility in the coming months. There's a continued focus on improving sanitary and quality conditions for local manufacturers of pharmaceuticals and medical devices, MOH funding, and this is an important, this is one, you call it the 2021 priority that's getting the most attention in terms of spending, is funding schemes for rare diseases impacting children, which there will be 80 billion rubles that will be put into the budget, as well as expanding access to free vaccines at both public and private healthcare facilities. So if you're looking at your 2021 expectation, these are some of the key priorities and trends companies should be expecting. Now, I didn't want to finalize with just the discussion around the domestic market, but really the industrial policy dynamics, because one thing we have only mentioned briefly, but it is around localization. So we saw in terms of pharmaceutical sales, obviously a negative story domestically in terms of the official numbers. But the important point here, at least in the first half of the year, the important point as well is that local production has increased significantly, both in terms of pharmaceutical as well as medical devices. Obviously, it's not a massive amount, basically just about 38 billion in terms of total production in rubles and 19 billion in terms of total in medical devices. But it is one where if you're looking at the level of growth relative to the levels that basically in equivalent periods in 2019, you've seen a massive production boom or boost that is also been part of the overall industrial agenda in Russia for a long time, obviously most clearly in pharma, but is one that is expanding and extending into the medical device sphere. And it's something that the Russian government has also been very clear that they are very much, it's a positive trend development in their estimation. And obviously the expectations for pharma, again, the expectation of companies operating in Russia should be towards more expansion on this front than we've seen in previous years. So that's just important to take on. So if you're expecting, say, that this COVID-19 crisis, which we've seen the level of export controls, import liberalization mix in many different countries, Russia is one country that is looking to this crisis as an affirmation of their previous biases before the crisis, and that you should expect to see a certain amount of pressure, whether you're a pharmaceutical or medical device company. Now, some of the key takeaways, again, we do expect a certain amount of shielding of healthcare spending. We do expect the major healthcare projects to be, at least the major ones, at least somewhat delayed in terms of the expectations of completion. And we see COVID-19 outbreak mobilization may derail certain spending opportunities. Now, on the other side, obviously a weak ruble and some import shortages have been a significant challenge for the pharmaceutical sector this year. And there's always one key dynamic here to understand is that the government is not necessarily going to move away from any levels of price controls or aggressive negotiations when it comes to public procurement going into the next year, especially given their localization focus. Again, the subnational dynamics, I think obviously as challenging as it's been for Moscow, some of the COVID-19 outbreaks, the resources in Moscow and St. Petersburg are very different from the rest of the country. Some of the biggest challenges our companies have faced, and I would say even regional governments and payers have faced, has been in the regions, in other regions of Russia. And that's important to understand is very likely to continue given even if the government decides to be more proactive in terms of its spending measures. Again, manufacturing localization is going to continue to be a big focus for the government, and procurement policies will increasingly be biased towards domestic producers and companies willing to produce locally. So all these are to take into account. I think we can obviously discuss around some actions to take around monetary pricing and localization policies on one end, revising market potential assumptions. Again, even as we're seeing a relatively solid recovery overall, it is important to take that into account within the healthcare conversation, and just continue to create and track key signposts. We still have to see a final budget. There is significant legislation on many of the different points we discussed so far in this presentation that basically over the next coming months should become much clearer. And I think there's still one market where, even if the government's digital health agenda remains relatively early in its process, it is one where digital health solutions are likely to be a bigger part of the conversation story going forward. And I'll leave it up to you, Claudia.
Great. Thank you, Mark and Antonio, for the insightful presentation. We will now open the discussion to questions. If you haven't done so yet, please use the chat box to ask any questions you may have. I'm going to read the first one we received. What impact would the approved vaccines have on Russia's healthcare outlook through the fall and winter? Great question. Mark, do you want to answer it?
Sure. I'll start things off, and then I'll let Antonio provide a little bit more color. So in terms of the vaccine, so first things first is of course Russia's vaccines and its current trial going on. Fundamentally, even if this vaccine does prove to be successful and is brought into the market, there are actual issues around production and getting it to much of the population, as a lot of the population, according to Levada polling, is a bit hesitant to take the vaccine, as well as a lot of the medical community, in fact. So the impact of Russia's vaccine itself, even if it does prove to be effective, and even if it is produced and distributed over time, let's say even earlier than in Western markets, the impact on the economy shouldn't be that, it shouldn't fundamentally change our economic projections or opportunities in the healthcare sector, broadly speaking, as this wouldn't really be speeding up the recovery of the economy or the recovery from COVID any faster than when a vaccine from, say, that's being in trial phases in Western markets would be brought into the market and distributed. So that's sort of the first thing first, but through the rest of this year then and into the beginning of next year, it's probably more of effective treatments. So we're already seeing hospitals and doctors, of course, responding better as we know more about the virus and symptoms and how to control symptoms and lower fatality rates. but then also treatments are being discovered and used, and it's understood what's effective. So I'll leave it at that. But basically, from an economic point of view, from a macro point of view, vaccines or even treatments shouldn't really fundamentally alter what we know today. Shouldn't alter our economic projections. Antonio?
Yeah, what I would add is this vaccine, as well as any other vaccine, if it actually drives a change in behavior, it becomes widely available and considered actually safe as well as effective. But the important thing is, if you're looking at its impact on healthcare spending going into next year, does it change patient behavior in a way that drives them to be much more comfortable going to hospitals, going to clinics, getting treated, and even getting diagnosed, let's just say, even as well as obviously getting going through elective surgeries. If you see that change in behavior, then yes, basically this announcement, as well as the rollout, will have a positive impact. If there is not that level of confidence in the market, then take that into account. Basically, it won't have that much of a positive impact. And as well, may delay, if there is a skepticism towards this and potentially future vaccines, that also obviously creates delays in terms of expectations for any kind of broad-based full recovery.
Great, thank you. Next question. What oil price requires Russia to achieve break-even on the governmental budget?
Okay.
Mark,
great. So
you want to?
Sure, I'll handle that one. So the break-even budget is around $42 a barrel. So obviously energy prices are right around there currently. Euros are actually, of course, a little bit lower. There's a slight differential between the Brent price and the Euros price, which is what Russian oil is traded in. But nonetheless, the oil price, that's what the budget is based upon. But the budget also anticipates issuing bonds, right? International bonds, and tapping international capital markets to fund the budget. So to actually have true break even, basically without having to rely on bonds, then we're talking about $50 a barrel. So only a bit higher, and that's actually our expectation for oil prices for next year. This underlies our fundamental sort of optimism around budget performance being better than expected. Also aided by the weaker ruble, as energy exports then, because of the weaker ruble, that will bring in more energy exports. It also helped with tax receipts from a lot of the large energy exporting commodity firms in the country, in which case the budget revenue side, I anticipate, will probably perform better than expectations, which will then allow for a lower deficit than is what is being expected, and then therefore higher spending, and particularly in healthcare. As healthcare, as Antonio mentioned, is such a key priority from the government's point of view. That, of course, is under our base case expectations. That is under the expectations of the government budget, which are quite conservative. But of course, if we're dealing with, of course, a disastrous sort of response to second and third waves, if the sanctions are absolutely disastrous and worse than expected coming from the United States, some of these other issues, Belarusian crisis extending and devolving into something much worse, any of these issues, of course, going in the wrong direction could upset sort of those fundamental drivers of our outlook for next year.
Thank you, Mark. I think the next question is for Antonio. Do you expect the Russian government will pursue aggressive pricing policies for pharmaceuticals and medical devices over the medium term, given COVID-19 conditions?
The key discussion is basically, once the COVID-19 crisis has shifted or changed, do we expect a fundamental rethink about the role? And this was kind of a bit of the hope for a lot of our clients early in this crisis. Was there a hope that basically this meant that healthcare spending, that basically pricing policies would become a bit more productive, or at least mutually fruitful between government, payers, and manufacturers? The point here is, to a great extent, no. I mean, basically, if your expectations were that the government was going to be more aggressive, and this is the challenge in terms of really building a business in Russia or in another country as well, it's the same dynamic. That isn't going to be so. However, there is also within this crisis an expectation that there is a big benefit of having basically a innovative pharmaceutical, medical device, and diagnostics industry domestically. So the government, to the extent that you're going to see a certain amount of leeway, will actually be not necessarily driven by questions around healthcare, but really around industrial policy. And if the government, and this is actually something even in Pharma 2030, if you're looking at kind of the expectations on that front, you're also looking to expectations around the medical device sphere, that is where the opportunity is going to be to basically have a more productive, conducive relationship with the government. But obviously that also comes into the discussion around having localized production in this market.
Thank you, Antonio. I think we have time for the last question. Should healthcare companies expect payment challenges for regional governments next year, given the fiscal outlook? I don't know if you, Mark or Antonio, want to take this one.
I'll take that one. What I would say essentially, what I would say in terms of healthcare spending in coming from provincial governments, again, one of the key dynamics we've heard from some of our clients is questionable payment delays, particularly in the first half of this year and to a certain extent in the last couple of months. Our expectation is that the government is going to try to be more disciplined, and the federal government's going to be trying more disciplined around its support for provincial governments next year. And again, we're not expecting even more resources coming from the federal government into these provinces. This is one of those dynamics where, as Mark had mentioned, if the economy recovers more quickly, if none of the negative downside scenarios occur, and you see better revenue activity, performance from governments, then you can talk about basically a reduced danger of payment delays. But again, this is one of those where it's going to be a bit more of a challenge when you're dealing with those payers than others.
Okay, thank you, Antonio. And I think we are nearing our time limit for today's webinar. If there were any questions that we were unable to answer on the line today, we will be sure to follow up with responses through your client services manager. Everyone will also receive a recording of the presentation within 24 hours. You can view these webinar materials and much more on our new mobile app, which is available for download right now on iOS or Android. For complimentary access to our suite of resources, including data, dashboard tools, and market monitoring reports, please email us at info@tuckerfrontier.com, and a member of our team will be in touch. Thank you, everyone on the line, for joining us, and we look forward to speaking with you again soon.
Great. Thank you. Take care.